So we are looking at audits, internal audits. So internal audits, we'll be looking at the purpose and function of internal audits. So what is the purpose of internal audits? So let's look at the purpose first. The purpose of internal audit comprises of audits and investigation and review of work performed by an entity for the purpose for control objective. So there is an objective that the management wants to achieve. There is a control objective that they want to achieve, and in that achieving that control objective, that's why they set up the internal audit. Am I together now? Are we together? Now when it comes to internal audit, it's not like external audit. They make use of the employee of the organization. So it is the employee of the organization that is going to be used for the internal audit. Are we together now? For the internal audit. So let's look at the functions of internal audit. Let's look at the function of internal audit. So we want to look at the internal audit activities. That means functions. One of the function is one. So we are looking at the function, we are looking at the purpose. So the one of the functions is monitoring. Monitoring of internal control. Now let me establish this now. We are looking at the function of internal audit. And it can be called internal audit what activities, because what's function? That means, so we say monitoring of internal control. Let me establish this again. It is not the function of the internal auditor to set in place internal control. It is the function of the management or those charged with what? With governance. Who are those charged with governance? The board of directors. Am I communicating now? So that means those controls that are put in place by the management or by what? By those charged with governance, which are the board of directors, they have put control in place to ensure that that control is adequate or is effective. They will now what? Set up an internal audit what? Unit that will what? That will monitor the internal control. Am I communicating now? Am I communicating? Now let's go to the second function. We have examination of financial and operational information. Examination of financial or operating information. Now, the internal auditor also what? Examine financial information. That means, is the transaction or the books of account, is it properly what? Presented? Is it properly classified? Are they properly measured? These are what the internal auditor will look at. Am I communicating? It is part of the function of internal auditor to review financial transaction or operational information, whether they are classified or whether they are identified appropriately or measured or classified. This is part of their responsibility. Now, another function is what we call review of economy, effectiveness, efficiency of operation. Now, when we say review of economy, and that's why you see that when a transaction wants to be processed in an organization, they normally send it to the internal audit. internal auditors to look at it. Why are they looking at it? To know whether, when we say economy has to do with acquiring what? Resources at a least cost. Let's say we have two suppliers, let's say three. Let's say we want to buy a pen, and A can sell the pen for us 100 naira. The same quality of pen, quality and quantity of pen, B says that they want to sell it for us 130. B wants to sell it for 130. Let's say C wants to sell it for 95. They are all of the same quality. Are we together? Economy means that acquiring what? The same what? Quality of what? Of material, or providing producing a product or rendering a services at a least what? Possible cost. So if you want to do it now, the internal auditor, that's why internal auditor normally do price survey to check. Is this price they quote? Is it appropriate? Is it the right price? So you now say, okay, you now recommend that we should buy this material from what? From supplier what? C, because we will get the same quality at a least price. So economy has to do with what? With minimizing what? Cost. Doing it at a possible, doing things at a least possible what? Cost. And that is the reason why, that is one of the functions of the internal audit. They will ensure that the activities of the organization or the operation of the organization are done at a least possible what? Cost. What is effectiveness? What do they do by a review of effectiveness? Effectiveness is efficiency rather. Efficiency has to do with using the desired output to produce, using the output to produce the what? The desirable output. Let me give an example. You need, let's say, an organization has made a standard that if one bag of flour can produce 50 loaves of bread. 50 loaves of bread. Now, if they put two bags of flour, it should be what? 100. Now, if they now put on one and they produce 35 loaves of bread, what's the efficiency is that there is wastage. That means they are not using the input, the output to produce the what? The desirable what? Input. That is what efficiency is talking about. Doing it in a right what? Way. Again, doing it in a right way. But its effectiveness, are we together, has to do with that output. Is it meeting the objective? Are we together? You can produce 50 loaves of bread. If that 50 loaves of bread, is it producing the objective of the organization? Is it achieving the objective of the organization? Because that 50 loaves of bread may not have the quality or the desired taste of the customer. And if the customer are not buying the goods, what happen? You will not make profit. And the profit maximization of the organization will not be what? Will not be achieved. And that is what external auditor also what does. They review the economic efficiency and effectiveness of operation. Am I communicating? Also, they do review of what? Of compliance. Review of compliance. When we say review of compliance, is the organization complying with the required what? With applicable rules or regulation? Because if an organization does not comply with rules and regulations, they will be exposed to what? To sanctions, to penalties. And this is what the external auditor also do. These kind of activities they also perform, the function. They also carry out what we call special investigation. And that's why when I started the class, we look at the purpose of internal audit. Or we say the purpose comprises of what? Of audit, investigation, and review of work done by an entity. For what? For control, to achieve the control objective. Am I Are we together? Are we together? Now, have a look at that now. Let's move forward. When we say special investigation, we are saying that they may be required by the management or those charged with governance to do an investigation into maybe they suspect that they fraud, or there are some extraordinary issues that occur that that the management they need information about that issue, so they can perform special investigation on a particular area. So let's go to the benefit now. Let's move to the benefit. So we've looked at the purpose and function of internal audit. We are looking at the benefit of internal audit. Now we have looked at the function. From the function we can derive the what? The benefit. Our number one benefit is that it helps to improve financial control or operational control within an organization. You know, how we perform our operation will be what? Will be effective, because we are able to reduce resources and purchase what goods at the minimum, at the least possible what cost. And don't forget that when it comes to financial control, everyone now knows in the organization that any activities that you are doing, there are someone that is representing the management or those charged with governance that can what? That can detect their activities of fraudulent activities or any error. Am I communicating? Now, also it helps to what? To improve compliance with rules and regulation. It helps to improve the compliance, because one of their function is to ensure that an organization complies with rules and regulation, and in ensuring that they improve the compliance with rule and regulation. Another benefit is that it improves economic and effectiveness and efficiency of operation. I think I have mentioned it, which will be a great benefit to the organization, producing at the least cost, producing the desirable output, and doing it what? Right, to meet the objective of the organization. Also, internal audits. The external auditor can also rely on the work of internal auditor, especially when the internal control mechanism in the organization is effective. So if there is effective internal control within the organization, the external auditor can rely on the work, because he will know that the errors and the fraud and the material misstatement in the financial statement could have been detected by who? By the internal auditor. So he can rely on the work of the internal auditor. So number 5 is that it enhances the reputation of an organization. When an organization have a sound internal control mechanism in place, it enhance their reputation. So they know that in that organization you cannot steal, you cannot do anything on the organization. Am I communicating now? These are the benefits of internal audit. So let's look at the independence of internal auditors and other problems with independence of the internal auditor and other problems with internal audit. Now, what did I say when I started? I said the people or the persons or the individual that will be used for internal audit are the staff of the entity. So because it is the staff of the entity that is being used, external auditor is being appointed by the shareholder. It's not the staff of an entity or organization. So the level of independence of external auditor is quite higher than that of internal auditor. Am I communicating? Is very high, because internal auditor cannot ascertain or attain the level of independence of external auditor. Am I communicating now? Am I communicating? And another problem of internal audit that there is no regulatory requirement. There is no regulatory requirement for internal audit, because the internal auditor report to who? To the management or those charged with governance. They are the one that will determine the scope of work of internal auditor. So these are the problems associated with internal auditor. So we can now ascertain the level of degree of independence that is required for an external auditor to that of internal auditor. So what will now be? What method can we use to try to ensure that the internal auditor is independent? So let's look at the method. Let's look at the method of trying to ensure independence. Method of trying to ensure independence. So let's go to method of trying to ensure independence. We are saying that an external auditor will have a problem of independence. Am I communicating? Because it's a staff of the entity in which is auditing. So how do we ensure that? We know there is a problem of independence, but how do we ensure that the internal auditor is independent to some extent? Even it can't get to the level of an external auditor. But how do we ensure that at least is independent? One of the methods that we can use, so let's look at the various measures that we can use to ensure that internal auditor is independent. Is what we call reporting line. Making sure that the internal auditor does not report to the finance director or to the account director. Am I communicating now? Or is not reporting to the accountant or the chief accountant of the organization. Who prepared the financial statement? Who prepared the financial information? The finance director or the chief accountant. Now let's say it's the chief accountant that the internal auditor is now reporting to. Is he independent? And that's why you see that in most organizations, the internal auditor does not report to what? To the director. He reports directly to who? To the management, to the CEO of the organization. So ensuring that the chief internal auditor does not report to the finance or chief accountant. Is that he report to who? To the CEO or those charged with what? Governance, which are the board of directors. And in board of directors, we have subcommittee. We have internal audit committee. So you can report to audit committee. So that will still have level of what? Independent, because it is not the people that is reviewing their work that is reporting to. So another is deciding the scope of work of internal auditor. Deciding the scope of what? Of work. Now, the people that is reporting to should not be the people that will be deciding should not be the same people that will be deciding the scope of work of an auditor, dictating the work that an auditor should perform. Just imagine the finance director or accountant is the one telling the auditor the area of work or his responsibility. So his responsibility should be determined by who? By the audit committee. Or by the board of directors. That will still ensure that the internal auditor is independent to some extent, because if we have the backing of the board of directors, are we together? And he can tell him the area in which he should perform his scope of work on. Because if you are reporting, if it is the chief accountant or the finance director that is deciding his work, he will know that the area, because maybe he has committed a fraud now, maybe the finance director has committed a fraud. If he's the one deciding the work of an internal auditor, he will only give him work where his secret will not be exposed. Am I communicating? We have another degree, what we call another method of ensuring independence of an internal auditor is rotation. Rotation of internal audit. Rotation of internal audit staff. You cannot be an internal auditor. Let's say you are an internal auditor for 10 years or 15 years. You are working what will happen? It will cause familiarity because you become too familiar with those that are performing the operation or performing or preparing the financial statement or financial information. So at least the staff of internal audit should be what? Should be rotated within 3 to 5 years. Am I communicating? Maximum 5 years. So the chief internal auditor should not be someone that will work for more than 5 years. So because they are staff, there should be another staff that can replace the existing internal auditor and do the kind of work that is performing. Am I communicating? Let's go to the appointment of chief internal auditor. It's another method of ensuring. So appointment of chief internal auditor, CIA. Now look at it. If it is the if it is the finance director or the director that is appointing or the director that is appointing the chief internal auditor, they want to appoint someone that will not say no to them. Those people that will be saying yes, that will not cause problem for them. Are we together now? So the appointment of chief internal auditor should be made by who? By the board of directors. So if it is made by the board of directors, even the internal auditor will have what? We have mind, and we have independent in appearance and independent in what? In mind to do his work. We have designing internal control. Another method is design internal control. Look at it. The internal control cannot be designed by what? By the internal auditor. Am I communicating? It is unacceptable. Or for the finance director to be the person to design. Who is responsible for designing the internal control? Those charged with governance, the board of directors or the management. Am I communicating now? So the work, that's why we're saying that the work of internal auditor is not to design. Are we together? The internal control. You know when we are talking about the function of the other time, we say monitoring of the internal control. So the internal control mechanism should be put in place by who? By the board of directors or by the management. The internal auditor is just ensuring that internal control mechanism is what? Is effective or is being what? Implemented. Okay, nobody should enter the organization without wearing ID card. You know, the internal auditor can walk around and check whether what is enforced is not the one that made the policy. It's just enforcing it. Are we together? Are we together? So let's now go to what we call. I mistake. I didn't include that. So let's go to the weakness or limitation of internal audit. So we look at how to ensure. Please, they can give you an example and give you a scenario. And give you a scenario opposite what you have said now. And they ask you that you should try to give method or ways in which the internal auditor independent can be enhanced. They can ask you. They will just give you a scenario and tell you how it can enhance. And students will not know how to link this with the last scenario. That's the problem. So let's go to the limitation and weakness of internal audit. So who can tell me one of the limitations or weakness of internal audit? It has no what? No regulatory requirement. there is no regulatory requirement that governs what internal audit. That means it is the management or the board of directors that decide who is qualified to be an internal auditor. You know, for external auditor, it is CAMA that prescribe how an external auditor can be appointed. But in internal audit, there is no regulatory requirement. Am I communicating? There is no regulatory requirement. And another limitation of internal audit is, look at it. If you have internal audit unit within an organization, those people, are you not going to be paying salary to them for having internal audit unit? You are going to be paying salary. You are going to be incurring costs. So the internal audit unit has a what? There is cost of having what? Having it. You incur a cost. Am I communicating? And the level of independence of internal auditor cannot be what? Cannot be. You cannot ensure the level of independence of an internal auditor. Why? Because they are staff of the organization. So you cannot get the degree of independence of the same degree of independence for external auditor to internal auditor. You can't achieve that. So there is limitation. Even though we have method of ensuring independence, the independence cannot be as equal as for external auditor. Am I communicating? That's why we say weaknesses and limitations of internal audit. One, it does not have regulatory requirements for who is to be or who is to act as internal auditor, or the work of internal auditor does not have any regulatory requirement. And two, there is cost of having one. That means we incur a cost for you to have an internal audit unit. Am I communicating? Or department. And the level of independence of internal auditor cannot be the same as that of external auditor. Now let's now go to the internal audit and risk assessment. Internal audit and risk assessment. Now when we say risk, what do we mean by risk? Risk, are we together? Risk is what prevents, an event that prevents an organization from achieving their goals and objectives. Am I communicating? And risk will cause an adverse effect on an organization. And that is the reason why management normally set in place. That's why management normally put in place what we call internal control system, or we call it internal control mechanism, to help prevent risk. Now, it is the one of the function of the responsibility of an internal auditor to also identify risks that will not enable the organization to achieve their objective. So it's one of their responsibility to do risk assessment. So in doing risk assessment, the internal audit helps to identify what risks. Am I communicating? And look at the impact of this risk to the organization. What is the impact of this risk to the organization, and how that risk can be managed? They make suggestion or recommendation to the management or board of directors on how the risk that they have identified, how it can be managed. And when it comes to risk, the internal auditor are bothered or are concerned about three types of risk. Am I communicating? There are three types of risk that the internal auditor will consider. And we have one, operational risk. Two, we have compliance risk. Three, we have financial. So let's look at what do you mean by operational risk? Am I communicating? Operational risks are risks that will affect the operating activities of the organization, affecting it in terms of disrupting it, stopping the operation of the organization. Am I communicating? And what can cause disruption to the operation of a client? Am I communicating? Breakdown of machines or plants. If they break down, will you continue? So internal auditor will be looking at what can causes the impact or what can causes the breakdown of these machines, and help the management make recommendation on how to what to prevent this now. Also, we have poor security arrangement where the the property of the organization is being what taken by an unauthorized person. What will happen? Let's say the laptop you are using now, maybe for your this thing, is now being taken by an unauthorized person. What will happen to your work for that day? It will be disrupted. And that's why these are that's why we say the internal audit unit, one of the activities is monitoring internal control. They are not the one that will establish the control, is the management or board of directors that will establish the control, but their own is to monitor whether that control is effective or not. And if it's not effective, they make recommendation to the board of directors or to the management. Am I communicating now? Also, poor, weak management or ineffective organization structure can cause disruption. Let's say the finance director is the one managing the marketing, managing this, managing that. What happen? There are some things that will happen, or they will be informed, because of too much of load. What will happen? That means there are some things that will be stopping the operation of the business because the organization structure is not well proper. Now let's go to compliance risks. What is compliance risk? Compliance risk is the risk that the organization will fail to comply with key rules and regulations. Am I communicating? And if an organization does not comply with key rules and regulations, what will happen? That means the company will be asked to exposed to different penalties. They will be asked to pay penalties, sanctions, and fine. And this is why one of the functions of the internal auditor is to review of compliance. So you identify those risks that will make, because look at it, compliance risks can also affect the reputation of an organization. So let's go to financial risks. So what's financial risks? Financial risks are those risks that happen as a result of change in the financial environment. Look at it now. This new tax law now, it favors some companies. It does not favor some companies. Some companies will be paying more tax, while some will not be paying at all. Am I communicating now? Are we together? Especially when you are making laws, that has to do with financial or incurring expenses that you didn't even cater for, maybe as a result of interest rate, increase in interest rate or exchange rate. It may cause financial risks. Now, if this risk has been identified by the internal auditor, the internal auditor will suggest how this risk can be managed. Am I communicating? How the risk can be managed. It can make suggestion to who? To the management or those charged with governance, with the board of directors. So what are the approach that the internal auditor are going to suggest or recommend to the management in order to help manage the risks that he has identified? Am I communicating? We have what we call one of the approach that internal auditor can use in risk management and may make recommendations to who? To the management. Is what we call, they have risk acceptance. What I call it? Risk acceptance. Now, especially, what is risk acceptance? Risk acceptance is when you are telling the organization that this risk, maybe the impact of the risk or the frequency or the occurrence of this risk to occur is very low. So instead of let's accept the risk, because am I communicating? Don't let us do anything about the risk. Let's accept the risk. Am I communicating? We don't need to reduce it because this risk is within our risk appetite. Am I communicating? is risk that the organization can accept because the impact of the risk and the possibility of that risk occurring is very low. What do? The internal auditor can advise the management to what? To accept the risk. And when a risk that the impact is low or the possibility of occurring is low, what is that risk said to be? Is insignificant risk. So that's why we are accepting the risk. Now let's go. You can also make recommendations to the management based on the approach is what we call risk reduction. And what do you mean by risk reduction? Risk reduction even means that the organization using what? Taking measures to reduce the impact or the possibility of the event, the possibility of the adverse event occurring. So the internal auditor can also suggest the measures that the management can use to reduce the risk that he has identified. These risks may occur as a result of indeficiency in the internal control. So it means that the auditor can now suggest a strong internal control measures or system that will help to reduce the risk. Now we have risk avoidance. Am I communicating now? Risk avoidance. Another approach to risk management that internal auditor may recommend to the management is what we call risk avoidance. What do you mean by risk avoidance? That means avoiding the transaction or situation that causes that risk. If you know that going to the market or buying things from the market will cause an adverse effect on the organization, what do? Risk avoidance means that don't go to the market, don't do anything. Or if you know that taking loan, am I communicating? If you know that taking more loan from the bank, taking more loan in the bank will cause financial risk, the auditor may recommend that they should know what? They should not take that loan. Because if you don't take the loan, you will not be exposed to what? To financial risk. Am I communicating? That will cause risk avoidance. So let's go to the fourth approach that fourth approach to risk management that the internal auditor can suggest to the management is what we call risk what? Transfer. How do you transfer it? Insurance. I can remember in our organization, pastors should be aware of this. We have a drone in our organization. We have a drone that they use for mapping the forest reserve and all those things to know how much the occupants of this forest reserve they will pay to the government now because of the large space of the land. People cannot be walking around the forest reserve. So the drone will map the area. They will tell that okay, the land is from this tree to this tree. Or they will give you, so you can map the drone. That drone, they were even using that drone to do capturing of the task station. That the drone fell from an high top down. Yes, now the drone spoiled. Thank God that drone was insured. It was the insurance company that replaced that drone because the drone was insured. So what happened? The risk of buying a drone now has been transferred to the insurance company because by then we are paying premium, and that's why some companies insure their building. You see some companies building cause fire or catch fire, and you see that they are not even bothered about it because they know that the money to rebuild that building will be paid back by the insurance company because they insure it. Maybe they did fire insurance. Am I communicating now? So this is one of the approach to risk management that the internal auditor can recommend to the management. So let's go to comparison of internal audit and external audit. You want to compare it. You know, we have been saying internal audit, external audit. So let's look at the differences between internal audit and external audit. And what we consider there are some parameters that we are going to look at that will give us the differences between internal audit and external audit. Am I communicating? So we want to look at the fundamental. I've seen this in past questions before also. So now we want to look at some fundamental differences between internal audit and external audit. So one of the fundamental differences is what we will call duty and responsibility. We want to know duty and responsibility. Now, when it comes to duty and responsibility of an external auditor, what is the duty of an external auditor? The duty of an external auditor is to what? Is to examine the financial statement and also to express an opinion about the examination of the financial statement. Am I communicating? So whether the financial statement shows true or fair view, or whether the financial statement is in line, is prepared in accordance with relevant standard rules and regulations. Am I communicating? So the responsibility and the duty of an external auditor is to form or to express an opinion about a financial statement or on a financial statement. Why the duty and the responsibility of an internal auditor is to examine the internal control system and to perform risk assessment. Am I communicating? Are we together now? So it's not to form an opinion. It's for him to examine, to monitor the system that has been put in place by who? By the management or by the board of directors. You can see now the difference. So another difference is qualification to act. Qualification to act. What qualifies you to act as an internal auditor and external auditor? Internal auditor, external auditor is acting based on status. What is the status that makes an external auditor to act as an external auditor? CAMA, Company and Alliance Matter Act. It's based on law. That means the provision of the law must be satisfied before you can act as an external auditor. But internal auditor, you can act as internal auditor. It does not require any statutory requirement. It is the management that will determine who is suitable to act as internal auditor. Now let's go to the appointment. Another parameter that we can use to look at the difference between internal auditor and external auditor is appointment. Appointed by. Internal auditor is appointed by who? By the management or by the board of directors. But external auditor is appointed by who? By the shareholder. It is the shareholder that appoints an external auditor. You know, there are some circumstances where an external auditor can be appointed by the director. You know, when the companies have not held their first annual general meeting. So in waiting for the annual general meeting, the auditor can appoint an auditor. The director can appoint an auditor. Or if there is any casual vacancy, maybe the person that is acting as internal auditor resign. Because he resigned, what happened? The director can now appoint someone to fill that vacancy till the next annual general meeting. Am I communicating now? And if they don't exercise that power, they can call for meeting. They can call for shareholders meeting because of the purpose of appointing an external auditor. So appointed by who? Internal auditor is appointed by who? By the management. While external auditor is appointed by the shareholder. So let's look at another. Is duty spelled out? The duty set out, right? The duty set out. What 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 kind of responsibility, what actually puts a responsibility on an internal auditor or external auditor? You know, for me to now, what is the duty? For me to ask, what are the duties that I need to perform? According to what? That's what we are looking at. According to what? So we are looking at duties set out by, that means it is the law, status, that set out the duty of external auditor. Are we together? Because you remember international standard 200 actually give an objective for an internal auditor. Even CAMA provide the primary duty of an external auditor was spelled out in CAMA. Am I communicating now? Now, it is the management that determine the duty of the internal auditor, because they will tell you, because they are the one that will determine the scope of work to be performed by the internal auditor. So they give you duty, they spell out the duties that you should perform. Now, let's look at the report. Report 2. The internal auditor reports to the management or board of directors. But external auditor reports to the shareholders, because at the annual general meeting he is going to give a report of the examination of the financial statement he has performed. Am I communicating? So these are the parameters that you can use to differentiate between internal audit and external audit. So let's now go to what we call operational internal audit assignment. Operational. So we are done with this. So let's go to operational quickly. Hope I'm not too fast. Now, operational internal audit assignment. So let's look at the definition before we go to general approach and specific functions. Operational internal audit assignment. It involves the internal audit being asked by the management to look at specific aspects of the entity operation. Are we together now? That means the management is saying that, okay, the marketing department, please help us to look at their activities. The sales department, help us to look at their activities. The procurement department or unit want to look at their activity. The store want to look at their activity. That means that's what we mean by what? Operational internal audit assignment. It is when the internal auditor is being asked by the management to look at a particular area of the business operation. Am I communicating? That's what we mean by. Now, operational internal audit assignment can also be referred to as management audit. It can be referred to as management because it's an audit that is being given or requested by the management, or you call it efficiency audit. Efficiency audit. Are we together? The purpose of that audit is just for you to assess the performance of that particular or specific area. Am I communicating? That the management has subject the internal auditor to audit. So what is the general approach that you use when carrying out an operational internal audit assignment? What is the general approach that you use? The general approach that the internal auditor will use is to look at the adequacy of the policy, procedure, or the internal or the control adopted. You know that area there will be control that they have adopted. Are we together? Adequacy has to do with what? Are we together? Is those control mechanism, is it adequate enough? Is it enough to enhance the performance of that area that wants to audit? Do you get what I just explained? Are we together? Now you say they should go and audit. They said they should go and audit the marketing department. You know, in marketing department, there will be what? The management will have, or the board of directors will actually have policies in place of marketing. What to do and what not what to do. Am I communicating? The external auditor, the internal auditor will now assess that those control or policy or procedures that has been put in place for marketing activities within the organization, is it adequate? Is it enough? Are we together? Are we together? Is it enough? Is it enough to ensure the performance of the marketing activities, to ensure that the objective of marketing, the marketing objective of the organization is achieved? Is it enough? Am I communicating? Are we together? Are we together? It's just like you having a big or a company having a big compound and they only have 2 security guarding the whole premises. And with a very big, let's say Dangote refinery now, is only 2 or 3, let's say 3 security that is guarding the place. Are they, is the security personnel, is it adequate? Is it enough to ensure the security of that place? That's what we are looking at. That is what the internal auditor will assess. The adequacy of the what? Policy, procedure, and control adopted. Because it's not the one to put in place those policy, those procedure, those control. The control could have been put in place. Are they adequate? Now, after looking at if the internal, look at it now, if the policy or procedure or control that has been adopted for that activities or for that specific activity that the internal auditor has been asked to carry out audit on, he will now, after looking at the adequacy, he will now look at the effectiveness of the policy, procedures, and control. These are the general approach that the internal auditor will use to assess operational internal audit assignment. Am I communicating now? He can ask you that the management asks you, that the management has asked you as an internal auditor to carry out an operational internal audit assignment on maybe procurement activities in the organization. That what are the approach that you are going to use, and explain. You know, it's case study. It's still this thing that is being asked. Am I communicating? So when we say efficiency, is that those control now, that okay, the control or the policy or the procedure that have been put in place is adequate enough, but is it effective? You may put control in place and people are not following that control or policy. Look at me now. There was a time in my organization when they said wear white on Monday. I don't like wearing white on Monday. Are we together? When I've been sent home to go and change, it's part of the control. Will I do it next time? Yeah. But now, is there control? There's no control again. Am I communicating now? That's what I was saying. It's not strong again. Okay. Are you getting what I'm saying now? So that's why I'm relating this to real life scenario now. You know, you may have, let's say, Dangote refinery now. They have thousands of security governing it. That means the security is adequate. But those security now, they don't have gun. They are always sleeping. They are always sitting down in one place and playing Ludo or chess or watching football. Even though they are adequate, are they effective? Are we together? I'm just looking at the policy or control. It may not be that thing. It may not be that just what I've explained, but that's how it's going to be. Am I communicating? That is the general approach that an internal auditor will use to assess or to perform operational internal audit assignments. Are we together? So let's look at specific functions that the internal auditors can be asked to perform an operational internal audit assignment. One of the specific functions or areas are procurement, marketing. So now I was talking about procurement now. Okay, how will the internal auditor assess whether the procurement activities in the organization is adequate and effective? These are what you are going to look at. Now, it may be the marketing, it may be the human resources management. These are what the auditor will look at. So let's look at one of the specific areas. If you are asked, maybe procurement now, you are being asked to carry out an operational internal audit engagement on procurement. How are you going to do that now? Am I communicating? So let's look at the specific area I want to look at now is procurement operation. Maybe you are being asked as an internal auditor to carry out operational internal audit engagement. What was the other name for it? What's another name? Management audit or efficiency audit. Now, if you are being asked to carry out a procurement operation, now you have to know what procurement activities is first as an auditor. So, what's procurement activities all about? It has to do with what? The responsibility of what? Of buying the items or resources that it is needed within the organization. Am I communicating now? So procurement operation are just like purchasing department. Am I communicating? Purchasing department. And the auditor now, am I communicating? Are we together? So the auditor will look at, what the auditor is going to look at? He's going to look at how what's the general approach? Is it adequate? Now, how will it be adequate? That means he has to look at the present policy or control that has been put in place. So you have to itemize this control and to show and to examine whether this control is adequate, is adequate or not adequate. Am I communicating? So what are the various controls that can be put in place? Are we together? In procurement activities is by what? The entity can have a list of suppliers. So from that list of suppliers now, like my admin, they have list of suppliers. If they want to buy anything, if they want to print anything, they have list of suppliers that they can contact to know the price and which one of them can do the work. You can even ask them to do billing, to bill, or bring your quotation. Let's see different quotation of the list from their approved list of supplier. So any other person cannot just get the job. No, if any other person or any organization, any company can just get the job, that means there is something. That means there will be risk that there are some company that does not exist that is even getting jobs in their organization, maybe because of internal person that is within the organization. They are not supplying anything, they are just getting money. So the entity now, the control mechanism they can put in place for that you can know whether it is adequate. If there is there should be an authorized list of supplier that the organization can purchase or that can supply goods to the customer. Am I communicating? Now there should be procedures for requisition of goods and services. Am I communicating? That means, look at it now. If there is no procedure put in place for us to purchase goods and services, what happens? That means we may be buying things that we don't need. Someone just feel that I need money. Okay, let's go and buy gun, or let's go and buy Biro. We have dozens of Biro that are still not used in the organization. They are still buying more. Maybe because you know the supplier that normally gives you money. So you continue to buy this even though they are not there. So one is that the entity should establish control that they put in place for. They should establish a approved list of supplier, and there should be a procedure for For requisition of goods and services. Are we together now? And there should be what? A procedures or policy put in place that will ensure that the purchasing department, that means the procurement unit, are buying at a favorable what? Price. So something that is worth 100 naira, if there is no policy or procedure put in place, they may be buying it 200 and someone in the organization will be cashing in. If there is large, and government do this a lot, if there is large contract that involve large supply of goods or services now, they normally do that through a tendering. We call it tendering process, where they will invite different or many supplier or contractor to come and bid for that job or for that purchase of or for supplying of those items. Am I communicating now? So they will bring their quotation and it is the best company that you now choose that will supply the goods. So companies can use system of tender for large purchase contract. Am I communicating? These are the control mechanism. And supplier performance should be what? Should be monitored. Someone that has not supplied the goods or the quality of goods that he has supplied is poor, we are still giving contract to him. That means there is someone that is benefiting from that person, from that contract in the organization. So if they are monitored, there is an update on the quality of goods that is being supplied by that supplier. That means that's the way of controlling what? The procurement operation, of putting control measures in place so that the organization will not be exposed to risks. And what are the risks that the organization will be? Okay, let's look at the control first before looking at the risks. Now, the payment system should be subject to suitable control. Am I communicating now? It should be subject to what? To suitable control. There should be control in what? In the payment. There are some organizations, if you don't supply the goods, they can't give you they can't pay you, especially if the goods is substandard, is not good quality. They will not give you the money. That's a system that they can use to what? To control. That's a control measure that they can put in place to put a system of payment in place now. We also have the reporting system where the performance of this supplier can be reported to who? To the management, like maybe the admin or the procurement director are reporting to what? The level of activities, the activities of each of the supplier and how they are performing. It can be provided to the management. So at the management level, they can even blacklist. There was a time where a supplier supplied a goods to one of our company, and the place where that goods was taken to, that product actually was taken to, they were complaining. So I have to give a report to the chairman and that this thing, people are complaining, is not, I don't have any involvement with the supplier. So, but this is what people are saying, people that are using it, this is what they are saying about the product. And immediately the man says that, the chairman says that by the next supply, if that person does not correct those things, they will blacklist the what? The company. Are we together? Now, if company does not do this, they will be exposed to risks. If those control measures not put in place, they will be exposed to risks like paying for things that they don't need, or pay an higher price for goods that they should have paid for lower price. Am I communicating? Some payment may be made to the supplier that are fraudulent. Am I communicating? That are fraudulent. Or supplier making payment to supplier when the supplier does not supply anything. If those control measures is not put in place, or payment made to a wrong supplier, these are risks. Or taking long to make payment to supplier. You know, when you take long to make payment to supplier, all these supplier have connection. They say this company, please don't do any business with that company. it will now create a bad reputation for the company. Am I communicating? Are we together? Now let's now go to, I know we are tired. So let's now go to how the auditor can test for the effectiveness. You know, if we look at, we need to look at, it's not his responsibility. It's just for him to look at, to assess whether those control or those policies or those procedures that have been laid down for the procurement activities, whether it is adequate enough. So if it is not adequate, if they give you a question, a practice question, and if it is not adequate, it means that you need to what? You can, from your question, you suggest what? You suggest control measures that can be put in place to ensure the adequacy of the internal control. So let's look at how to test now. The auditor will do a lot of check when testing for the effectiveness of these policies, procedures, and control. That means the auditor will need to what? We take a sample of, if you want to test how, whether the control that has been put in place, whether it's effective, whether they are following it, whether they are implementing the control put in place by the management. So the auditor will need to check. And how can he check? He can check by taking a sample of the purchase order and track the order from the original purchase representation. That means when that thing was required, you know, if you go to the store now and they say the paper or the A4 paper or the toner, they don't have again, what happened? You know, they have requested, they will alert the admin department that they don't have toner or A4 paper in the requisition. Can you see that? That means you will trace it from the requisition of that purchase. Am I correct? To when the requisition, you know, the store will make a requisition that there is need to admin department, that there is need for them to what? To buy toner, right, or A4 paper. Now, that toner will not just be buy, they will not just buy it because they have made requests that they need to have it in store. No, that means after they have looked at that requisition now, there will be someone that will approve the need for them to purchase, for the procurement department to purchase the toner or the A4 paper. Am I communicating now? So we will check who approved that purchase. It will check. So it will trace it. What this thing that they have purchased. Did they request for it? What prompts the organization to purchase this thing? Did they really need it? That's why it's tracking it, the order from the original what? Requisition to through what? The approval. Who approved it? Who placed the order? Was the order delivered? Am I communicating? What is in the invoice of the things of the item delivered? And how is the payment made? Has the payment been made? This is what the auditor will look at. And if the auditor is able to see that the organization followed the true protocol, that means they are what? That means that control system put in place is what? Effective. Am I communicating? Are we together now? Now, the internal auditor can also review the control that are applied by who? By the management. Is either he pick a sample and run through the what? The processes in that what? In that order. The requisition, the order, the goods was delivered, who authorized it, was it supplied? That is what's it called? That is carrying out a check. Carrying out a check on a sample of purchase order. Now, another method that I can use, don't forget we're looking at procurement. That means carrying out an operational internal audit engagement on procurement operation. Is that the auditor can also look at the internal control mechanism that have been put in place to check whether that internal control system is being followed by who? By the procurement department. In placing an order, did they follow the, you know, we have looked at the control mechanism. Those control measures, are they buying goods from the authorized list of supplier? If they are not buying, that means the policy or the procedure is not what? Is not effective. It may be adequate and not be what? Effective. That means they are not following it. Are we communicating? Yes. So let's stop for that. So we have used an example. So it may be marketing. So you need to think. There's need for you to think. If you are doing audit, not just cram and pour. Sometimes if you cram, you don't even know what to do. So you need to understand this thing. So let's now look at the value for audit. We want to look at other internal audit assignment. All these things are other internal audit assignment. So what are the other assignments that the internal auditor can perform? So let's list it out. We have an internal auditor can perform a value for audit or a value for money audit, best value audit, financial audit, and information technology audit. So let's look at value for audit. Value for money audit. Value for money audit is actually originated from a public sector organization. It's public organization that normally use value for money audit. Am I communicating? But private companies are now using it now. Are we together now? And this value for money audit is used to assess the performance or the financial performance of an organization in terms of to assess the financial performance. And when you are using value, when an auditor is doing or performing value for money audit, it looks at three major things, and those major things that you look at that you consider when carrying out a value for money audit is what we call 3 E's. 3 what? 3 E's. And I've explained the 3 E's in the early class. What's 3 E's? Economy, efficiency, and what? And effectiveness. So let's look at it once again. I've explained that, but I'm not doing much on that. So if you are explaining value for money audits, you should explain that it's used to assess, is a way of assessing the financial performance of an organization. So let's look at these 3 E's that you have to look at now. We say economy. Economy has to do with doing it what? Cheap. Are we together? Doing it cheap. That means you are not spending money on things that are not necessary or overspending things on things that you should spend at a least cost. Just like what I explained the other time. Am I communicating? That means the money you spend should justify. There should be justification for the money you have spent. That means doing it what? Cheap. Efficiency has to do with what? Doing it well. That means comparing the inputs. That means what you have put into the operational. Is it providing the output? Am I communicating? That's efficiency. Effectiveness has to do with what? Doing it the right way. Doing it the right way is that comparing the output with the what? With the objective. With the objective. Are we using the output? Is the output achieving the objective of the organization? You can make money, but are you making the money in the right way? Are we together now? So that is what has to do with economy. Economy means what? Not spending more than it's necessarily to obtain a resource. Just like I explained. You can buy something worth of 10 naira from someone. Why buying it 15 naira from another person? Where you can buy it cheap. That's economy. Efficiency has to do with what? Getting an high volume of output from resources that are being used. So we have used 1 bag of flour. We are supposed to use 1 bag of flour to produce 10 loaves of bread. And are we producing 10 loaves of bread for 1 bag of flour? If you are not producing that, we are not effective in our operation. Am I communicating? Being productive. That's what means by what? By efficiency. efficiency. Now, effectiveness has to do with what? Achieving the objective of the organization. That means you link the objective of the organization with the resources that have been used. Is the resources that have been committed into the operation of the business, is it achieving the objective of the organization? Am I communicating? That is the value for audit. Am I communicating? Are we together? So we call it 3 E's. 3 E's. Are we together? Now the auditor now to check the over whether the performance is good. When you are using value for money audit, you know I told you is to assess the performance, the financial performance of an organization. Are we together? Now, an organization will have good performance if they are able to have an high level of performance in all the 3 E's. You cannot have high performance in economy and efficiency and effectiveness you don't have. So it means that there must be high level of achievement in all the 3 E's. That is when you can say an organization have a good what? A good performance. Are we together? Are we together? Now let's now look at what is the problem with value for money audit. One of the problems is measurement difficulties. Because we can measure economy, but how do you measure effectiveness and efficiency? It is not very what? Easy to what? To determine effectiveness and efficiency. Look at it now. How will you measure the effectiveness and efficiency of human resources department? Am I communicating? Or the internal audit department? It's somehow difficult to measure. Or the training that you have given to or training department, how do they measure their performance? And if you look at value for money audit, the main emphasis is on what? Is on cost saving economy. Is on cost saving. So there must be possibility of company focusing on cost saving rather than what? The other two what? 2 E's. These are the problem with value for audit. So let's go to this. Another audit internal audit assignment. We have best value audit. Look at best value audit. Best value audit is just like it's also an audit method that is being introduced by the public sector organization. Am I communicating? But private sector are now using it now. Now, the fundamental concept of this best audit is for continuous improvement. Continuous improvement of an organization. Am I communicating? That means the organization is not just focusing on what to achieve now. Are we doing better than last year? That is what this best value audit focuses on. It focuses on the concept of continuous improvement. Now, and there are 3 C's when it comes to 4 C's rather. 4 C's. It focuses on 4 C's. What are the 4 C's? We have challenge, compare, consult, and complete. Challenge, compare, consult, and what? Complete. That's why I say it focuses on what? You can see he used acronym C because everything starts with what? C. It focuses on what? On 4 what? C's. So let's look at the challenge. The challenge. Challenge has to do with ask how a service is provided. Are we together? We are asking how a service is provided. Are we together? You ask how do you provide. If you are an internal auditor, you want to carry out the best value audit. So don't forget it's for continuous what improvement. But the challenge that you say is that you now ask maybe different department or the department you want to carry out the best value audit for now. You know what's the essence of what's the focus? The focus is on continuous improvement. You just want to continuously what improving the operation. Don't forget it is part of the objective of internal audit. The benefit of internal audit. What do we say? We say improvement in the financial and operational operation. Are we together? I think we talked about that. So you challenge means that you are not asking question. You are asked question from that individual or for that department. How do you provide your what? Your services? Now, after you are providing that question, you now challenge them. You are challenging them in the way in which that services is provided, that there can be what room for what improvement. Okay, when attending to customer, are you looking at the customer? Are you listening to call? Are you attending to any issues? Do you attend to that issue immediately? Am I communicating? You know, when you are asking question, you will be able to see what deficiency in that system or in that services that are provided. That's challenging means what? Asking question. Asking question, and you challenge the need to provide any services. Are you providing any services? What is the services you are providing? You now begin to tell me the service. From the services you are providing, I can find out a fault in that services that you are providing. Compare. That's the second one. Compare. You now may compare with what? With similar organization. Maybe look at it now. Maybe that organization they are best in what? They are best in providing that kind of services. You now compare them. Are we together? You now compare the services or that department, how they are doing things. You now compare with. You are benchmarking it with businesses that are advanced more than the company. What happened? That will now enable you to do what? To have continual improvement, because there are those that you are now looking up to, that this is the way in which they do their own thing. Now, after you are making comparison enable you to look for ways of improving. That's why you are looking for organizations that are doing, and that's why you see sometimes you see like internal revenue service. You see a internal revenue service coming to Ondo State to come and understudy. Ondo State going to Lagos State to go and study, because they are looking for how can we improve our services. So you now consult. How do you consult? You discuss the services provided with the users of these services. How is it? You are producing bread and want to improve the performance or the quality of bread that we are producing. Who is the best person to ask for how to improve the services? The users. They will tell you, when I eat the bread, I feel this sugar taste. The sugar there is too much. Maybe you should reduce the yeast. The milk there is not enough. Are we together now? Those are the. So you consult, you discuss the services provided with those, because you want to improve service with those users of these services. That's where you consult. Are we together?
Yes, sir.
Now, complete, which is the last. Complete. Complete has to do with you using fair competition as a means of improving performance. Are we together? Using what? Competition. It can be within the organization, maybe a company, a department providing the same similar what? Responsibility, or an individual doing the same work. Now say if you are able to generate, you know, like they do that in direct assessment, they will tell you that they have station, Ondo State Internal Revenue have station all over the state. They said if any station makes more than 100 million, that they are going to give that station how much then? Is it 500,000? They are going to give the station manager 500,000. Whether you collect the best star or that 500,000 will be addition. Whether you collect the best performing station manager, best station of the year, best star station of the year, you still collect 500,000 naira extra. What are they doing? They are doing, they are what? They are creating a fair what competition that will help to what? To improve what? Performance. Am I communicating? So if organization, okay, want to improve our performance, they see that, okay, Akim PMDW, or let's say Dangote is bidding for a contract, let us also bid for it. So if the best companies are bidding for it, let us also bid, so that it will enable us to work to improve our performance. Am I communicating? That is what we call value for what? Best value audit. Best value audit. Now, the reason why the auditor is using these 3 C's is just for him to establish whether the organization has the best procedure in place. And if that procedure is not the best, that means there will be ways to improve the procedure to enable the companies to provide the best value performance. So let's go to financial audit. Financial audit. I know we are tired. Financial audit. Now, financial audit is just simple. Financial audit is just the traditional role of internal auditor. You know what is the traditional role of internal auditor? They review what? Accounting record or records. And that's why you see that in my organization now, if we raise a voucher, the auditor will look at it and will put his red, he will even write check and sign on that voucher. Am I communicating now? So now, financial audit has to do with review of accounting record or other record or items that will appear in the financial statement. You know, they review it. Management account, they review it. These are work that internal auditor always perform, and that's why we call financial figure. Am I communicating now? And this work normally overlap with external auditor, because what is external auditor doing? Examination of financial statement. That means when an internal auditor is performing financial audit, that means they are also examining the financial information of an organization. So this is one of the roles that the internal auditor also perform. So they will now look at identifying when performing financial auditor, the auditor also look at the risks or look at the control that will be put in place to ensure those information are properly accounted or presented or measured in accordance with the standard. So if those controls are not put in place, the external auditor can recommend methods or make control measures that can be put in place to ensure that transactions are recorded appropriately in the accounting record. So let's go to information technology IT audit. IT audit. These are assignments. There are other assignments that the internal auditor also performs. Internal audit. Yeah. Information technology audit. Are we together? So let's quickly run that. Now, when we talk about information technology audit, that's IT. That means mean that the internal auditor is now examining, or assessing the internal control that has been put in place for the internal, for the organization computer and system. There are some organizations they use system, they use application to perform their operation. Now, those control mechanisms that have been put in place to ensure that the system work in accordance with how it has been developed. Are they controlling the system? Is the person, there are some organizations where authorized person, if I want to check my email now, I have unique password. I can't just give it to anyone to do it. Or if I want to operate on my system, nobody can just sit down on my table and begin to operate my system. Am I communicating? These are, even though IT has to do with what? The system and the what? And the organization computer. There are some organizations that what they do, they don't do much of paperwork. Am I communicating? They don't do much of paperwork. So this is when an auditor assess the internal control involved in the operation within an organization computer system. So they will also be looking at both the hardware and the software. Am I communicating? And this control, especially for companies that are computer-based, they have computer-based system. Am I communicating? They have computer-based system. There should be a procedure that are put in place to ensure that unauthorized person does not have access to what? To their computer program. Am I communicating? And in doing this, there are two categories that an organization must put in place to ensure that there is effective internal control within control mechanism put in place. So their control falls within two categories. We have general control and application control. General control is the control over the environment in which the computer-based information system is designed, developed, operated, or maintained. Am I communicating now? That is what we call general control. Am I like in an organization now? Maybe we are using, look at it, we are using, let's say we are using QuickBook for our accounting package. But the general control is not specifically what? To QuickBook. We are saying the control within the environment. That means the computer that we are using to carry out our operation, to perform our work. How are people using it? What are the control measures that is being put in place to ensure that people does not have authorized access, or the data or the file data in that system is not being exposed to unauthorized persons? How do we back up the information that you have on that system? These are what we have under general control. Am I communicating? Are we together? Now, if you want to change anything now, if I only want to change anything now, okay, let's say CSC, let's say a service provider in your organization, you now require that they should change a specific thing in your organization system. What are the procedures they have to follow? Will they just change it like that without authorization of anyone? That means anyone cannot just change anything without having a thorough without having a authorization. Are we together? How do we back up the system? That's what we all know. Are we together? Now, I will say that general control is applicable to all the entity computer-based information system application. Am I communicating? Whether hardware, software, general control is applicable to everything. Why application control is a specific control over each specific computer accounting application. So if you are using QuickBooks now, or if you are using an accounting system for your inventory, how do you protect, what is the control that is specifically what linked or related to that to that system. So you can see now that general is for the overall computer based system, while application control are specific control over each specific computer application. So in some organization they have different accounting packages that they use for their inventory. What they use for their procurement may be different. So what are the controls they have put in place? Are we together? Is transaction on that system, is it properly what authorized? Is that information on that system or the data on that system, is it complete? Am I communicating? Is it accurate? Is it timely? These are the things that you will have to put in place that is the purpose of application control. Am I communicating? Now, use of IT within the organization. Now they can ask you that if the IT within an organization is not properly guided, maybe the control mechanism put in place is not effective, what will it cause? It will cause theft of data. There will be loss of data. There will be loss of intellectual property. There will be even theft of funds. Look at the story that we had, that a customer hid in a bank and waited for everyone to leave. He now want to hack into the system of the bank. That means the security system put in place in that bank is very, very poor. How can someone just hide in, so no one is watching the CCTV camera to check whether people that enter into the toilet, is from the toilet that the person climb. Okay, is that person coming out? White. It's not like we black. We will put CCTV camera, nobody is watching over the CCTV camera. It's when things now happen that we now begin to rewind to check issues. All those white, you see someone station to watch. I think if one person is sleeping, the other person will be watching. And if they notice any unusual movement, they can easily prevent. So don't let us dwell much on that. Now, the status of internal audit report. Who does internal audit rise to? To management. That means he's working on the behalf, he's just a representative of the management, because it's management that appoints him, or the board of directors that appoints him to act on their behalf. Acting means the internal control mechanism that they have established, is it effective? They monitor it to know how to ensure that it is being implemented. And they prepare a report. Who did they prepare the report to? Their findings to the management. Am I communicating? They prepare it to the management. That is what we call the status of internal audit report. They write their report is being prepared and presented to who? To the management. Am I communicating? And there is no regulatory requirement that governs how their report should look like. Am I communicating? Now let's go to the status. The structure of internal audit report. What are the structure? What is the structure of internal? There is no requirement, so the structure may just look like this now. So the structure, we have what we call the introductory item. So you have it in the report. That is what you are going to find in the report of internal audit report. Am I communicating? What are the possible things, or how is the structure going to be like? What is mean by introductory items? That means the cover letter, the title of the report. Am I communicating? Those that that the report is addressing to. Who are we addressing the report to? Is going to be stated. The department that prepared the report, they will write prepared by internal audit, the date of the report, and whether the report is confidential or not. That's when you go to see in the introductory items. Am I communicating? You will see the title, the person that the report is being addressed to, the person that prepared or the department that prepared the report, which will be the internal auditor, the date of the report, and whether the so you now have the executive summary. For those, by the time when you move to professional class, you'll be doing what's called case study. So case study, you'll be required to write executive summary. This is management does not have time to be reading everything. They don't have time. Just imagine let's say a CEO of a company now, and that's why you see that if you are chairman, like the former chairman I know now, that if he's reading any report, what we will just do is the end part of the report. Those introduction parts, does not, you just look at it, approve or not approve. Because the management does not have time to be reading 50 pages or 10 pages or abstract. So you need to prepare what we call executive summary that will in that executive summary is the main point of the report that will be in the executive summary. Am I communicating? It will spell out the purpose of the report. What are the main points of the report? Your findings, the main findings. What are your suggestions? What are your suggestions? What are the recommendations to the management? So that by glance, the management the executive officer can know the exact content in the report. Now, lastly, in that report you have the main text of the report. That means the body of the report. That's where you have the observation, the findings, those are the recommendations. These are what you will find in the body of the report, or you call it the main text of the report. And lastly, you have, you may do some workings, or you may attach some document to it, and that's what we call appendix. Those that are not part, those items that you cannot include on the main text of the report will be in the appendix. These are additional information or some workings that you have attached to the report. Now let's move to outsourcing internal audit. That means outsourcing internal audit, what we are looking at is that some organizations normally outsource their internal audit. Instead of using their staff, they may give it to a private companies to come and be doing the internal audit for them. Am I communicating? They may ask an external a company, an external entity to come and perform an internal audit functions for them. That's when you outsource. No, it's not only that. Some people outsource their security cleaner, just the same way. They will give the contract out to an external entity to perform these roles for them, especially. One of the main reasons for outsourcing, I will soon conclude. One of the main reasons of outsourcing internal audit is that when they know that the cost of establishing a department of internal audit is quite very expensive, so they may decide to let's give it out to an external entity to perform that role for us. Am I communicating? And if the company is a small company, getting someone or setting up an internal audit department permanently may be too difficult for them to do or too expensive for them to do. So they may outsource it on a main temporary basis to an external entity. Now let's look at the benefit of outsourcing your internal audit work. What's the benefit? Now, one of the benefits is that there is no need for the company to recruit any staff. There is no need for the company to recruit any staff. And also, two, is that the organization has been function, that internal audit function has been assigned to, they will have the required what? They will have the required skills, and there will be what? There will be specialized staff that is available to perform the work. Are you getting what I'm saying now? So they are not looking for, they are not bothered about whether someone is qualified or not. They know that the external entity that they have outsourced this to they will have the required skills. The cost, the cost may vary based on the work that will be performed by the company in which they have outsourced the audit, the internal audit to. Let me give you an example now. Look at it now. If a company is a small company and the work of the internal audit department is very small, they don't need the work. Whether babu work or not, what will happen? They will collect salary. But for outsourcing now, you may base it on the work. You may base it on, okay, it comes once in a month or twice in a month, so that we will be paying you this amount. Am I communicating now? So there is cost and flexibility. The cost of internal audit function varies, is a variable cost rather than a fixed cost. So a company therefore only pay for internal audits when they make use of it. Are we together? Outsourcing is like more economical for small companies. For small companies, it's more economical for small companies. So let's look at the problem. The possible problem of outsourcing internal audits. What's the problem? One of the problems is changing personnel, because the external auditor, the entity which they have outsourced that internal audit functions to, may decide to withdraw the employee that is serving in that organization and replace it with someone else. So there will be changing personnel, there will be cost, because they won't just provide their personnel for you, so there will be cost that will be paid for the internal audit services that they are providing. Also confidentiality. If you are using your staff, the information remain within your organization, but when you are using the staff of another company which you have outsourced to, that means the information of another company may leak. These are other functions. They have control. The entity may not have control over the internal audit work because they have outsourced it. Because it's that outsourced entity that will be controlling the internal audit work in their organization, so they can lose control of the internal audit work. There will be conflict of interest, especially when it is the company that is providing the external audit, is the one providing the internal audit. There will be conflict of interest, because it will create an ethical issue, because the work performed by the internal auditor of the same company, of that audit firm, is that the same audit firm is the one examining the financial statement. There will be There will be self-review work. There will be self-review trends rather. So it will cause conflict of interest. So with these 3 points of mine, we have been able to come to the end of this topic, which is internal audit. Thank you. God bless you.